It is Monday, June the 15th, 2026. We hope everyone had a nice weekend. As I mentioned on last week's video, it's really nice that this time of year with the kids out of school to just try to spend a little bit more time with them and work from home a handful of days. We had a really nice weekend. Both my boys are very into hockey, and not hockey on the ice quite yet, but just around the house. We've got like the little mini hockey sticks, and they are just constantly playing hockey and hurting one another. Just trying to teach them sticks have got to stay down. Just let's work on some skill. We don't need the big body checks that we're watching in the Stanley Cup, and obviously the hockey as far as the NHL goes ended last night with the Carolina Hurricanes right up the road in Raleigh, winning the cup. So that was pretty fun for them to see, and just what wild times in the Kroll household. So we hope you had a nice weekend as well. Markets trading up a little bit here this morning. The headlines are the U.S.-Iran peace deal. Right, so you see markets up a little bit on that. As we've been talking about for a while though, like that outcome was largely being priced into markets for a while now, right? So maybe the biggest market mover is the front end of the curve in the oil market, right? So obviously the contract for the current month that was obviously quite volatile with oil, not knowing when exactly the war would end. But you see oil retreating below $80 a barrel again here this morning, which is good to see. All right, so market's up, but really that's not the story everyone's talking about, right? So last Friday, SpaceX goes public, the largest IPO in history, but by a long shot. All right, so the company raised $75 billion, which again ended up being, from a valuation standpoint, right? Because the whole company doesn't come public. That's not the way it works. Just that parts of the business become public. But so it ends up being nearly a $2 trillion business right out of the gates. The trading here is going to be fascinating. It really is. There's so many moving parts. I want to go over a couple of them here. All right. So as expected, what you usually get when you have IPOs with a lot of excitement, you get this first 1 day pop, right? Because the shares become available to everyone, right? And you could go and buy them today if you wanted, right? And so you always get kind of like this 1 day pop. And so we saw that on Friday, right? So it comes out, trades up near $180 a share, pulls back in the 60s, 160s. This morning, hovering around 170. It opened about 175, now around 170. Who knows where it goes from here? So I waited as long as I could to draft this quarterly newsletter, right? I just sent it over to the designers and the printers, but before they end up in your mailbox here in a couple weeks at the beginning of July. But I just thought it was a really good time just to touch on IPOs, and SpaceX more specifically. All right, so just important to know, and just I think the context helps, and I wrote this in the newsletter. All right, so at this valuation, where SpaceX is currently trading, it's trading at 100 times sales, right, or 100 times revenue. Meaning at these prices, if you go and buy a share of SpaceX, you're paying $100 for every $1 of revenue the company makes. Right, so you're paying $100 in share price for $1 of revenue. All right, so just to put that in perspective, so again, SpaceX it's trading at 100x revenue right now. NVIDIA, right, which we've talked about a lot. They mostly make the chips for the AI movement. All right, NVIDIA is currently trading at 25 times revenue. So investors are paying $25 for $1 of earnings. A lesser valuation. Your typical, all right, so your average S&P 500 company, these are all really, really big businesses, trades at 3 to 4 times revenue. So SpaceX, 100 times revenue. NVIDIA, which is very high growth, 25x. And then your typical S&P 500 company, like 3 to 4 times revenue. All right, so just kind of goes, I think that puts in perspective like how optimistic people are. Yep. Too much? Yeah, I don't know. Time will tell. I have no idea the way this will all play out. Like maybe investors paying 100 times sales will be rewarded in the long run. But this is the challenging part with IPOs, and like the history, the data is like really clear. All right, and again, maybe SpaceX will be the anomaly. It is a really cool tech company that does things that no one else does really. But when you're paying that kind of multiple at that kind of valuation, it sure better perform. Like it better start making money someday. Because like on the price, like it loses money. So to be clear, like they have sales, but they currently lose money. All right, so that brings me into my next point here, because again the trading is going to be fascinating here in the weeks and months ahead, because what you're going to have, so obviously the shares are available to retail investors and anyone could buy them. All right. But the forced buyers are certain index funds. All right. And now there are a number of different index funds. The S&P 500 is maybe the best known index fund. We'll get to that one in a minute. But you have others, right? You have the Russell, the Russell 3000. You have the MSCI. You have the NASDAQ 100. All right. And so, with the exception of the S&P 500, basically, essentially all the other major index players are making exceptions for this SpaceX IPO to have the ability to include SpaceX in their index sooner than they ever have before. So for example, the Russell is expected to start including SpaceX 5 days after their launch. So that would mean like this coming Friday would be 5 days of trading of SpaceX. So at that time, SpaceX will very likely start to be included in the Russell index funds. Okay, the MSCI, it looks like they are 10 trading days. The NASDAQ 100 is likely going to include SpaceX 15 trading days. And there are a number of others that they're all like within the first month. All right, so what that means, so what are the market implications for this? Well, if you're a fund manager that manages an index fund, all right, so say you manage the Russell 3000, so you manage an index fund that is supposed to replicate the Russell 3000. What that means is you're going to be a forced buyer of SpaceX shares as soon as it gets included. All right, so that's going to be a large amount of capital that's going to be forced buyers of SpaceX in the weeks ahead here. Okay, so you're going to have this should provide SpaceX with some really strong tailwinds out of the gates here. Okay, now interestingly, the S&P 500 said, "No, we're not going to change our rules just for this mega IPO." So the S&P 500 kind of sticking with, but just more their traditional process and methodology. So the S&P 500, what they say, their rules are, we are not including any new IPO until it trades for 12 months, and the company has to have a profit. Okay, so for S&P 500, like that, SpaceX will not be included in the S&P 500 for a minimum of 12 months. And at that point, they have to be profitable, right? So again, they're still showing a net loss in their business. So we'll see. So you're going to get a bunch of forced buyers, but then the other side of the token, again, you're going to see some very savvy, some very, very smart money, where the other thing that's going to happen in the coming weeks is more shares are going to become available for short sellers, right? Those of you that have traded markets before, like when an IPO first comes out, there aren't that many shares available to borrow and try to sell short. So again, short, if you're selling things short, that means you're kind of betting against a company. But without question, there are going to be investors that look at this and say, all right, this company is trading at 100 times revenue. You got a bunch of retail investors pouring in. Like, there will be investors that start shorting this thing. And whether they're right or not, time will tell. But more shares will be made available in the weeks and months ahead for big hedge funds, short sellers to start coming in if they feel it's overvalued. That will put downward pressure. The other thing that will put downward pressure is eventually you have these lock-up periods. So lock-up periods, that means like if you were an early investor in SpaceX, I mean founders obviously, but if you were an early like venture capital fund, there's a period of time these investors need to wait after the IPO before they're allowed to start cashing out and selling their shares. All right, so these lock-up periods will also start happening. They'll come to closes in the months ahead. So my guess is you're going to see some early investors also try to get out. So that's why this is kind of a long-winded video, but it's just so interesting because you're going to have these tailwinds, again, just these forced index funds that are just forced to buy it to include the company in their funds. You have retail investors that are just excited about technology and have no idea what valuation means many times. And then you have lockup periods, so you have short sellers coming in, and the price action without question will be volatile. And just as a student and as a fan of markets and just the way these all work, I'm just so excited to see how this all plays out. From an investment standpoint, do I think you should buy it out of the gates? Probably not. It's just my take. At 100 times sales, and really, I also point out in our newsletter that you'll see in a couple weeks, just some sound data, how on average, and again, this could be an anomaly, but on average, IPOs underperform the broader market by a pretty wide margin. So questions, comments, concerns, please don't hesitate to reach out to our team. And we'll see the way this whole SpaceX thing shakes out. We hope you have a great week. Thanks.